Hey traders, welcome back to the channel. In today's video, we'll be diving into our Sunday market breakdown, where I'll be analyzing key market trends and potential setups for the week ahead. Don't forget to hit that like button and subscribe to the channel for more insights every week. Let's get into it. In this video, I'll provide a detailed analysis and the logic behind each move, so make sure to take notes on how we approach the market. The first pair we'll be analyzing is pound sterling to US dollar. Remember, when analyzing the market, always start from the higher time frame and then break it down to the lower time frame. Starting with the higher time frame, we can see a clear uptrend, characterized by a series of breaks above previous highs. From this perspective, we're looking for long-term buying opportunities. Let's zoom in on the current market price for more insight. First, we had an initiation phase, where the market pushed upward and broke above the previous high. This bullish momentum continued until the market reached a point of exhaustion. This was followed by a correction phase, where the market pulled back to fill the gaps left behind and regain its strength. We're now anticipating the continuation phase, where the bullish momentum will be restored. To capitalize on this phase, we need to identify the end of the pullback using the Fibonacci retracement tool. We can see that the price has already retested the golden zone, where many professional traders look for long-term buying opportunities. Next, let's try to identify an order block around this area to hop on those buying opportunities. Looking at these candles from this time frame, it's difficult to spot a clear order block. Situations like this often lead traders to identify incorrect order blocks, resulting in false signals. The correct approach here is to check another time frame for a valid order block. I'll transition from the daily to the 8-hour time frame to find a valid order block. On the 8-hour time frame, we have a clear spinning top candle, which can be considered a valid order block, so let's mark it out. Looking to the right, we can see that the price has already retested this order block, meaning we missed out on this long-term buy position. In such situations, one option is to switch to a smaller time frame for a lower time frame entry. For this analysis, I'll switch from the 8-hour to the 2-hour time frame. On the 2-hour time frame, we see an internal change in market character, indicating that the internal bearish momentum is depleted, and buyers are taking over. We have a lower time frame order block that we can expect the price to retest, as well as a clear fair value gap. This means that the price is likely to pull back and fill this gap, giving us the opportunity to go long. This is what you should expect on pound sterling to US dollar in the upcoming week, so exercise patience and wait for the right setup. Next, let's look at euro to US dollar. We're in a clear uptrend here, characterized by breaks above previous highs. From this higher time frame perspective, our focus will be on long-term buy positions. Zooming into the current market price, we can see that the market initially experienced an initiation phase, where it pushed upward and broke above the previous high. This bullish momentum will continue until the market reaches a point of exhaustion, meaning we're currently in the pullback phase, which will then be followed by the continuation phase. Since we're still in the pullback phase, we can consider short-term selling opportunities as the price completes the pullback. However, there's a crucial rule to remember before trading pullbacks. Looking at our Fibonacci tool, we can see that the price has already retested the equilibrium level, indicating that buyers are stepping in, trying to push the price higher. Because of this, we won't consider any further selling opportunities. We don't want to go against the incoming bullish momentum. What we can do now is identify the extreme demand zone for potential buying opportunities. Additionally, there's a large gap that the price will likely fill, so we can hope that the price drops to retest our extreme demand zone, presenting us with a chance to go long. If the price doesn't drop, we'll transition to a lower time frame to look for buying opportunities. Currently, the lower time frame structure is bearish, but if the price breaks above the local swing high, it will signal the start of the continuation phase. At that point, we'll identify a valid demand zone and capitalize on buy positions. This is what you should expect on euro to US dollar in the upcoming week. Just be patient and let the market play out. Now, let's move on to gold ounce per US dollar. We're in a clear uptrend here, marked by consistent breaks above previous highs. From this higher time frame structure, we can pinpoint an extreme demand zone, indicating that we'll be looking for long-term buying opportunities on this pair. Let's switch from the daily to the 8-hour time frame for a closer look. On the 8-hour time frame, we can see a fair value gap just above our extreme demand zone, which the price might want to fill. This suggests that the price could drop to retest our demand zone, providing us with an opportunity to enter long-term buy positions. However, When we apply the Fibonacci levels, we notice that the price has already retested the golden zone, a key area where many buyers are stepping in to push the price higher. With buyers taking control, it's less likely that the price will drop further to reach this higher timeframe extreme demand zone. Instead, it seems the price might have respected this lower timeframe demand zone. From here, we should expect the price to push up and break above the swing high. Switching to a much lower timeframe, we can see that the price has already broken above the local swing high, confirming the start of the continuation phase. There's an extreme demand zone that the price has already retested, which presented a solid opportunity to execute buy orders with targets set higher. I actually sent this signal to my free channel, and we've already locked in profits around this price, so now it's a risk-free trade. If you miss this trade, just be patient, price will likely give us more buying opportunities as it progresses to the upside. This is our analysis on gold, so keep an eye out for further buying opportunities. However, we can't entirely rule out the possibility of the market dropping to retest this extreme demand zone. Finally, let's take a look at US dollar to South African rand. This pair has been in a downtrend for quite some time, as evidenced by consistent breaks below previous structures. However, the market has recently failed to break below the current swing low and managed to pierce through the current swing high with a wick. This indicates weakness among sellers, suggesting that buyers will soon take over and push the price above the current swing high, signaling the start of an uptrend. Let's switch to a lower timeframe for a clearer perspective. On this lower timeframe, we can see that the internal structure has already turned bullish, with subsequent breaks above previous highs. We also noticed a fair value gap that the market pulled back to fill, giving traders an opportunity to execute their buy orders. From this lower timeframe structure, it's evident that we should be focusing on buying opportunities for this pair. Zooming in for a clearer picture, we initially observed an initiation phase, which means we are now in the pullback phase, to be followed by the continuation phase. Looking at the Fibonacci retracement levels, we can see that the price has already retested the golden zone, indicating that buyers are stepping into the market to initiate the continuation phase. Now, we need to identify a valid order block to capitalize on the upcoming buying opportunities. However, from this time frame, we don't have a clear order block, so we need to switch to another time frame to find a more defined one. On the new time frame, we do have a valid order block that we can use for potential buying opportunities. Additionally, the price has printed equal lows above our order block. We know that equal lows generate significant liquidity in the market, and to access this liquidity, institutional traders might push the price down to clear all the stop losses resting below the equal lows. This would give us a prime opportunity to execute our long-term buy orders. This is what you should expect on US dollar to South African rand in the upcoming week. We have a very promising setup, so always be on the lookout for these opportunities. That's it for this week's market breakdown. I hope you found these insights helpful and that they'll guide your trading decisions in the coming days. If you enjoyed this content, don't forget to leave a comment below with any questions or thoughts. You know I always appreciate your feedback. Make sure to hit the like button and subscribe to the channel. Thanks for watching, and I'll see you in the next video.